Hello. A very warm welcome to all the investors present today and welcome to a truly first of its kind webinar. Today's session dives deep into Q3 earnings to uncover what's really happening beneath the surface. Discover which companies, sectors and market caps have shown improvement or witnessed a decline. We'll also wrap up the session with an interactive Q&A towards the end. Over to you, Dr. Mohit.
Thanks a lot, Jason. Warm welcome to all of you. This is a first of a kind webinar that we're doing today. We are going to continue this as a series every Monday till the time the result season is on. And obviously the result season, as you know, goes on for around 45 days in a quarter. And we have 4 quarters of result season. So we will be busy pre-analyzing what is happening in the corporate India earnings and what are the stocks that are typically moving down or moving up depending on their quarterly performance. So this is a new initiative that we've started. We want to track the quarterly results on a weekly basis rather than we were never doing this in the last 10 odd years. We've never come out and spoken about quarterly results and the result on the CFD dot. Now let me just explain you how this is more relevant, because as you know, the score on MarketsMojo is a derivative of 4 different factors. One being quality. Quality is a long-term parameter, which is a 5-year fundamental strength parameter of a stock. It can possibly change during the result season, depending on how the result has come out. So that's the first factor. The second is the current financial trend. So you will in this presentation see a lot of mention of the CFT score, which is the current financial trend. The current financial trend changes every quarter. It is the fundamental momentum quarter on quarter that is changing within the stocks. So the CFT score inevitably changes the overall score because it has got a certain weight. When we look at these 4 parameters, they have different weights in calculation of the score. Third parameter being valuation. Obviously with earnings, the valuation dot also goes through a change because the earnings are revised on a quarterly basis, and that also has an impact. And the final is the technicals. So technicals typically also can undergo a change on a day-to-day basis. Predominantly we look at 1 week, 1 month technicals, and we look at all the 7 parameters, but it can have a bearing change. So why is the result season important for us? Because a lot of companies undergo a score change during the results period because of the CFT, which is the financial trend, which is quarterly financial trend dot being changed. Now, in terms of what are the weights, we are very, very aggressive to make sure that our quality of a stock, whether it is a buy or a strong buy, remains paramount importance to us, which basically means that the long-term fundamental trend is the most important to us. Then comes the short-term fundamental trend, which is the CFT score. So today we are going to cover the result season initial highlights in terms of what is happening. We are also going to cover what sectors seem to be shaping up and not shaping up equally. And within those sectors, we are also going to cover what are the stocks that have the highest score jump that we've seen. You've always asked us, is there a place where I can see the top score companies? And on these weekly format of reviewing the results, we will be showing you the top 5-7 companies that have changed their score upwards to make sure that you are in track with the current happenings on the result season. So today is the first time that we're doing it. I'm going to cover, there are around 160, 170 odd companies who have already declared results. You must also know that we are the only player in the market today that covers all 4,000 companies on results. And I'm going to be covering all 4,000 companies with you. And obviously, the insights you can see in detail on the site. But every Monday, till the time the result season is on, we will be coming in at 7 o'clock to make sure that we broadcast this to you. Sometimes we can do this in the afternoon as well. At 2 o'clock, 3 o'clock, there's a various time slots at which we will be reaching out to all the investors. Let's look at the initial trends. Before that, let's look at the disclaimer. Please read the following important disclaimers carefully. These points outline the basis of information shared and your responsibility as an investor. This is a resource, not advice. All information on this webinar is intended as a resource to enhance your research and understanding, not as investment advice. You need an independent verification. We strongly advise all participants to consult with certified financial experts before making any investment decisions. And investment in securities is subject to market risk. Equity and equity-related securities obviously involve a higher degree of risk. And past performance is no indicator of future performance and should not be construed as a guarantee for future returns. Before I move on, just to inform you that we have closed most of our offers. This offer where the whole of MojoOne plus stock of the week, which was coming to you at just a small price of 14,999, and we were giving you an extra 1 year free, is finally closed. Thank you all for subscribing to this particular offer. It has been a great hit, this particular offer. But more than that, my personal favorite offer, which is the US plus India, we are now going to close it. It is closed for all the unpaid users who are coming new to the site. It is applicable, currently only available for webinar attendees, and we will be closing this offer soon as well. It may happen today, it may happen tomorrow, but I'm not sure, but we will be closing this particular offer. Now let me tell you what this offer is. We've never done on a 1 year product, 2 year free with US. So this is India plus US. And you would know how important it is to track US markets, not just now, but over the next 3, 4, 5 years. That importance will never go away. So this is a US plus India offer. We've never done this before. We are giving it out for 19,999 for 1 year, but in this you get 2 years free. So this becomes a price for 3 years effectively, which is a 90% discount that is going in. The link is there. Please make sure that during the webinar or after the webinar, you immediately subscribe to it so that this offer doesn't run away as well. This is only available for webinar attendees. This is only available as a benefit to our paid users if they want to extend. In this, your India pack also extends by 3 years, and you get a new pack, which is the US pack for 3 years. You should not wait for your expiry of your current subscription, because if that expires, then obviously this is not applicable. This is only for live users who have 6 months, 1 year, 2 year, 5 year subscription already. They can take an extra 3 years on the India pack, plus they can add a 3 year of the US pack. So that's the benefit. Great pack, considering it is an India plus US pack. With that note, let's look at the proceedings today. All right, so we have 164 companies as of today who have declared results. 44.5% are trending positively. 39.6% are flat performance, and 15.9% are negative trends that we are seeing. So almost 45% have got positive trends. Now that is a good number to start with. And the reason I'm saying that is I'm going to show you the, compare this with the last quarter's number, so that you will be able to compare quarter on quarter how these companies have performed. The data that I'm going to show you today of 164 companies, I'm going to dice this out. The same 164 companies who've declared results so far, how they did in the last quarter versus what they're doing in this particular quarter. Let's look at a little bit of more market cap distribution. This is a simple data of 164 companies. So far, 8% companies have declared their results. 8% of the companies are large cap companies. 18 companies, which is 11%, are mid cap companies. There's a large number of small cap companies which have started declaring results. 49 companies so far, which is 30% of 164, which has declared results. And micro cap is 84 companies. So 51% of these companies of 164 that have declared results are actually small cap companies. The only encouraging start on this slide is the number of companies which are either positive or flat. Negative is about 15.9%. Positive, as I said, is a good start of 44.5% companies declaring positive results. Let's move on, go a little deeper. Now, surprisingly to most of you, or maybe not surprising, mid-cap companies have declared the best results so far. So if you look at the large cap companies, 13 companies declared results, 23% were positive, 69% were flat, and 8% were negative. If you look at mid-cap companies, 18 companies declared results, 72% were positive, 22% was flat, and 6% was negative. And if you look at small cap, the second best, 53% positive, 25% flat, and 22% negative. And good performance by even micro caps, 37% positive, 45% flat, and 15% negative. Some of the best CFT scores, let's look at some companies that have recorded some of the best CFT scores. I will come to the overall scores, but CFT score, as I said, is the quarterly result score that goes into the contribution of the overall buy, strong buy score of the company. The best in large cap has come out as Union Bank and Tech Mahindra, both of which have a CFT score of 12. The worst is HDFC Life Insurance with a CFT score of -8. Let's move on to mid cap. The best that has come is Bank of Maharashtra with a CFT score of 16. And the worst is a company by the name of MV Photovoltaics with a CFT score of -16. If you look at small cap, 49 companies, the best result has been declared by so far Indo-Thai Securities, a CFT of 38, and worst is Lotus Chocolates with a CFT score of -35. And if you look at micro cap companies, the best has been a company by the name of BLB with a CFT score of 26. So my mid caps out here are so far leading the rally, as if I'm saying leading the rally as if the election results are coming out, but we are going to make sure that this keeps building on week. But mid caps are leading with a 72% positive results, and Bank of Maharashtra, Union Bank looks like something is happening on the continued good performance of PSU banks. We will go to the sectors. We will see what's happening across the sectors. It's a very, very insightful presentation. Please stay till the end. Let's move on. Let's look at the sectors. Now, I've taken the top performing sectors so far, and I've taken the underperforming sectors. If you look at the top performing sectors, there are two ways of looking at this particular data. Let's look at this the both ways. Let's look at positive result success. Positive result, where are the maximum positive results that we're seeing? Now, if you look at public sector banks, 6 companies have declared results. All 6 are positive. So that's 100%. If you look at fertilizers, 4 companies have declared results. All 4 are positive. So that's 100% again. And then if you look at NBFCs, 10 companies have declared positive results. 6 are flat. So that's a 62% of the companies in NBFCs declaring positive results. And then if you look at gems, jewelry and watches, that continues the trend, because you know that some of our stocks are from that particular segment. 3 companies out of 4 companies have declared positive results. One of the other factors that we need to look here is the purple column that you see, which is the improved CFT. It shows that how many of the companies have improved from the previous. So one way of looking at it is how many companies are giving positive returns, but the other way is to see how many of these are improved. To give you an example, let's assume there is a company that had a CFT score of 24. And so that's a positive CFT of 24. Now let's assume that this quarter it is 23. So it is still positive, but actually the CFT score has reduced. So the improvement in the CFT score tells us the momentum in that particular sector. So if I can have the big screen. If you look at NBFC, 75% of the companies actually improved. Whatever grade they were in last time, they actually improved. So that gives an added edge out there. But if you look at public sector companies, public sector banks, only 2 companies improved. So they were already in positive, only 2 companies improved. If I were to combine both of these data points, then suddenly what looks good is the NBFC, which is currently 62% positive, but 75% of the companies have actually improved their CFT score rather than just being out there. It can be an improvement from negative to flat, it can be from flat to positive, but there is a momentum that is coming in on the NBFC side. Now, similarly, if you look at the public sector banks, you will see that although all the companies gave positive results, but only 2 improved from last quarter. So there is a little bit of a stagnation that one can see out there. The same story continues if you were to look at fertilizer. Only 1 company improved out of 4 their positive CFT movement. It went up from the last quarter. What looks good is again gems and jewelry, where 75% of the companies gave positive and also 75% of the companies improved the CFT score. Right? So highlight of this, because there's too much data, let me just make this easier and give you the highlight. What is looking good is NBFC. What is looking good so far is gems, jewelry and watches. And what is looking good is also capital markets with 64% improvement. And what is visibly looking good, but the trend is declining, is the public sector banks and the fertilizers. Now, obviously, this is a build-up exercise, right? This is only 162 odd companies, and there are 4,000 companies results coming in, but these are very early indicators of how things can look like. I think when we cross 2-3 weeks, we'll be able to say that we are getting close to what the final outcome would be. Let's look at the underperforming sectors. Now, if you look at the underperforming sectors, the same filter on negative, IT hardware, both the companies that have declared results are negative results. But now next column, if you see, both these negative companies have actually improved from negative. So they can be minus 15, they're still negative. So they can be minus 15 to say minus 7. So they're still negative, but they have improved. So there is an improvement that is coming in this particular sector. Now, if you look at the other highlight would be something like industrial manufacturing, where 2 companies have given negative, 3 are flat, 1 is positive. Improvement is across 4 companies. Iron and steel, if you look at, there are 3 companies, total of 4 companies that have declared results. 3 of them have improved, although they have not improved. 2 of them are positive and 2 of them are negative. One of the things that clearly can build up the story out here is iron and steel. If you see out here, 4 companies, but improvement is across 75% of the companies. And as we see more and more companies coming out, iron and steel products, there is a big possibility that it will move into the first table of top performing sectors. So what are the learnings so far that we've captured? 164 companies declared their quarter 3 results. 44% are showing positive financial trends. Mid caps are leading with 72% positive, and NBFC sector is dominating currently the positive side. Mid caps 72%, NBFC 63%, companies declared positive results and 75% improved. And small caps have fundamentally started looking stronger. 53% of the companies have declared positive results so far in small caps. Now let's look at what has changed. How is this data different from the September quarter? Right? And then I'll go down to the buy-sell recommendation of some stocks that have changed. And obviously then we will look at the result-driven score changes that we have seen. What is the immediate impact that we have out there? Okay. Now what we have done here is that we have taken the same 164 companies and we saw what was the result of these 164 companies in the September quarter versus December quarter. So same 164 companies, how they did individually, how they did in the September quarter and how they did in the December quarter. To just see quarter on quarter, the result that 164 companies have given, has there been an improvement? Let's look at that data. If you look at the positive trend in the September 2025 quarter, 34.1% companies had positive trend, which has gone up to 44.3%. So obviously there is a very, very clear, same companies are doing better in the December 2025 quarters. And that's, the reason we should analyze this properly and we should go into deeper points on this. And the reason I'm doing this is because a lot of our 2026 outlook depends on how this result season goes up. And, finally towards March, when we see maybe a rally coming up on broader indices. So we are in the build-up stage today. So positive trends obviously better, 34% versus 44%. Average CFT score of the same 164 companies in September was 3.24, which has gone up to 5.11, which is a 58% increase. That is good improvement quarter on quarter if you see September quarter versus December quarter. Now let's look at some of the top CFT improvements and some of the top CFT declines in these 164 companies. TMO production, this also has micro cap, so you may not have heard certain companies' names, but some of the companies you will know. TMO production, 22 points improvement. Now this is jump, right? So let me just tell you how this is relevant to an extent. A company's CFT score, if it is minus 10 and has become 12, plus 12, that can also be a 22-point jump, right? These are not absolute numbers. These have to be compared to the last quarter. ICICI Pru Life, 22 points jump, again one of the highest jumps that we've seen. NetWeb Technologies, 22 points jump. It's one of our top scoring companies today. Axita Cotton, 21 points jump. The same set of 164 companies, let's look at the companies which have declined from September into October. Ravindra Energy, 25 points decline. Soba, 22 points decline. Maharashtra Scooters, 21 point decline. And Geo Financials, 18-point decline. All right, let's talk some companies here. Out of these companies, 18 companies are today, out of the 164 companies, 18 companies are today in the buy and strong buy. The ratings have changed and they are now in buy and strong buy categories. 39 in the hold category, 88 companies are in sell and strong sell categories, and 19 companies are not rated. If you look at the December versus September quarter, 2 companies out of 164 were in strong buy, remains as 2 companies. 18 companies which was in buy becomes 16 companies, so drop of 2 companies. Hold remains similar, 38, 39. Sell goes from 40 to 53. Strong sell goes from 47 to 39. If you look at this particular trend, there is not much of a movement so far in terms of buy and strong buy. They are quite similar as in the story. There's a lot of movement of CFT scores that have happened. Some companies have become better, some companies have become worse, but out of the 164, 50% of these companies, according to us, are sell and strong sell. 44 companies, 44.5 companies gave positive returns, but still 50% of the companies, according to us, are in sell and strong sell. Top rated buy stocks today after the results in 164 companies are the following. HCL Technologies with a score of 85. NetWeb Technologies with a score of 82, small cap, IT sector. Union Bank again comes, large cap. PSU Bank with a score of 78. Bank of Maharashtra, which has worked very well Obviously, mid-cap, PSU Bank, 78. South Indian Bank, small cap private bank, has come with a score of 75. These are so far the top 5 companies in the 164 companies where the results have been declared. This is the first time that we are introducing this kind of an analysis. And a lot of people say that results, how do I know which are the top segment companies? So here you can see that post the first round of the results, it's just been 2.5 weeks that the results have started coming out. Out of 164 companies, we have 5 companies which are typically coming as the top companies. HCL Tech, NetWeb Technologies, and there are 3 public sector banks, which is Union Bank, Bank of Maharashtra, and South Indian Bank. Let's look at what we have covered so far. We've covered that quarter 3 was the strongest quarter so far in the last 4 quarters. So quarter 3 is coming out as the strongest quarter so far. As I said, it's only 164 companies. We should wait. I think in the next 2 weeks, the trend will be very clear. The positive companies trend has jumped from 34% to 44% vis-a-vis last quarter. 18 stocks are now buy, with information technology sector leading prominently with 6 new buys. Now IT, obviously information technology, there's a lot of cost rational that has happened out there. There's a lot of dollar benefits that have gone in out there, but they have improved their efficiencies. Obviously the key takeaway is the average CFT score has increased significantly in this particular quarter from 3.24 to 5.11. Let's look at price movement now. Something very interesting comes up. And what is happening after the results? Are these companies being rewarded or they're not being rewarded? And that is something that we're going to cover today. That whether these companies are being rewarded and what is going on in the mind of the investors. And there's a very interesting data which is completely topsy-turvy. But let's try and analyze that data in terms of to try and see what is happening. Despite this strong result, the market is not responding so far. So market is still conservative and the market is not that responsive right now. Also, please understand that the index on a YTD basis, since the time these results started, is down by around 1.63%. So there's an overall negativeness in the index that is there. Now please look at this with a good heart. The reason that I'm saying with a good heart is primarily because when the index turns, the fundamentals and the fundamentally strong companies will turn way faster. So a lot of times you say good time to buy. The good time to buy for the top companies is very good in these market scenarios, specifically when the index is negative and the companies are giving great scores or the great results that they're giving in this particular quarter. It shows you that the fundamental strength, at least on this quarter, is still intact, is coming back. As I said, the sample size is smaller, but in next 1 or 2 weeks, we'll keep seeing how the whole corporate earnings of the country build up. Let's look at the return distribution. If you look at the positive price movement of these 164 companies, only 23% had a positive price movement after they declared results. 40% had negative price movement and almost 36% there was flattish. There were no price movements out there. One company went above 20%. In 10 to 20% jump after results, there were 4 companies. 0 to 10%, there were 34 companies. 0 to negative 10%, there were 54 companies. And a large negative of negative 10 to 20%, there were 11 companies. Below 20%, there was 1 company. Top gainers. Premier Polyfilms, 30% return. Continental Securities, 11.04. And Uranus Infrastructure, which is a sell in the system at a 10.32% return. Top losers, Elecon Engineering, 30 sell according to us at 22% down. GTPL Hathway, sell stock, 16% down. GM Breweries, hold stock, 15.59% down. Let's make it very interesting now. Now this is my favorite slide, and let's see what we can analyze here. Let's stay on this slide. Let's absorb this particular slide. What we did here is that we looked at the market caps, and now you know that mid caps declared the best results. The second was small caps. The third was micro caps, and the fourth was large caps. The result is the opposite. Large cap on an average of these 164 or 8 companies that declare results were up by 0.65%. Mid caps, 10 companies together were down by around minus 0.82%, better than the index still. Small caps were down by minus 3.37%, in line with the index because I'm talking about the broader markets of 1.6 down. So there is a lot of pull and push that is happening with the market being on the negative zone and the strong companies also suffering out there. But the large cap doing better tells you that there is still a lot of conservativeness in the market. It is still not picking up that momentum that it should pick up despite good financial results. What it will also do is improve the valuation of mid and small cap companies. If the price doesn't pick up but the earnings have picked up and price is actually corrected, it may make or take the mid cap and the smaller companies or the small cap companies in a better valuation zone. So that is what is happening. What it tells me very clearly is that market is still conservative. Market is still not going bullish on smaller or mid-sized companies where the results are coming good, and it is still in the conservative zone, which is not a surprising thing for us because we know that is how it is playing over the last 6 months. What is though positive is that the result calendar that is coming out is clearly showing better quarterly trend as compared to the September quarter. That, according to me, is the highlight. This picture can change very, very soon. This is good news, sentiment-driven picture. But what it is clearly telling us is that there is a better valuation zone that mid-cap and small-cap may go in. There is no clear trend that we are seeing, even in outstanding company results, very positive results also. The bucket is negative. Positive also it's negative. Only in flat. So there is no trend. It's getting the surgery is happening all across. It is currently not rewarding the fundamental strength of the company, specifically with such geopolitical issues going around, with news after news, with every single day, now 10% more tariff, 500% more tariff, or whatever that is happening, the market is not stabilizing and the fundamental is being missed, which is something which is very, very good for us. It is very good for us because you can at certain times start your buying in very fundamentally strong companies, even if they are beaten down because of the geopolitical issues or because of the negative news in the market. So 40% of the stocks that declared results, although 44% gave positive results, 40% saw negative price movement. Only 23% saw positive price movement. Strong financial trends right now is not getting into immediate returns, which is good because at least we are getting not stocks which are declared good results and they are up 5%, 7% zone. Large cap are holding best depending on the conservativeness in the market. So at a 0.65% average movement, it is in contrast with the result performance. The result performance is lower at 23% positive, but large cap is still holding the fort. A key takeaways is market context. Let's have it. BSE 500 index was down minus 1.63% YTD, influencing overall market segment. And companies with outstanding financial results still saw an average return of negative 3%. So that is something that obviously talks about broader weakness due to geopolitical concerns contributing to further market downturn, and also investors still staying on the conservative zone. Now let's look at micro caps for a bit. From near zero to hero in one quarter, let's look at what this means. So if you look at quarter-wise performance of micro caps, we are looking at March quarter, June quarter, September quarter, and December quarter, right? Positive results were 37.9%, in March quarter went down to 35.2%. In September remained around 35%, and in December quarter there is a 44% right now. So obviously what we are seeing, and again this is limited data, so let's not build any hypothesis still, but what we are seeing is there is an improvement in the microcap performances. Average CFT score also, if you see, we keep talking about last 3-4 quarters not being good. But if you look at this, 3.62 went down to 2.7, went to around 3.24, and current quarter it is currently at 5.11. So the trend looks to be positive. Now let's look at the average CFT score by market cap. Large cap, now you have to, I'm sorry, you were reading the column, now you have to read the row. So just read the row, and the quarters are in the row this time. March 2025, 5.33. June came down to 4.5 for large cap. September came down to 4.58. December it is further down, which is 2.69. So large cap CFT average score is actually come down. Let's look at mid caps separately. 9.88 went down to 8.25. Came back to 9.88. And it is at 8.28 right now. If you look at small cap, 6.39, 4.78 June, September 5.39, and in December it is almost at 7. So big improvement on the small cap side, big fall on the large cap side so far. And if you look at micro caps, the biggest improvement, 0.57 went down to 0.2, then 0.52, but currently it is 3.6, which is 6 times better than the average of last 3 quarters as compared to the current quarter. Again, my disclaimer is it's only 164 companies. The story will look much, much better as we just spend another week or 2 weeks on this, because a lot of companies are coming out with their results. But I think so far what we are seeing here is mid caps are leading, micro caps are turning around, small caps are maintaining, large caps is where people are going in because of the stability of the market and because of the risk off strategy currently in the market. People are still not willing to take that risk. There are some interesting companies out here where we are seeing consistent 22 companies. We have consistent 4-quarter positive results. There are 29 companies where consistently 3 quarters are positive, and there are 44 companies where consistently 2 quarters positive. Let's look at the top companies which have come. I'm saying top as per the results. I'm not saying as per our scores. There are top 4-5 companies that you should see out here. We have consistently delivered 4-quarter good results, and these incidentally are only in the small cap segment. Wari Renewables, incidentally it's a sell on MarketsMojo. 32, the latest CFT score. NetWeb is a strong buy in our system at 82. Small cap again. Consistent 4-quarter positive results. Latest CFT is 32 again. Krishna Poshcam, small cap, 72 buy, 31 CFT. MB Agro Products, some of these companies are in our Infinity portfolios. And Raga Productivity, both are 29-24, currently hold in the system. MB Agro quite close to a buy, getting into a buy zone, but otherwise they are hold in the segment. So these are 4-5 companies that are typically the smaller companies where they're continuously declaring great quarterly results. This is the last 4-quarter consistent performers. As I said again, Wari, NetWeb Technology, Krishna Poshcam, MB Agro, and Raga Productivity. If you look at the improving trajectory, there are stocks that have jumping. There's Indo-Thai Securities, which had minus 19, moved up to plus 14, September quarter plus 36, and this quarter plus 38. So these are big jumps. Wari Renewables, plus 26, plus 27, plus 29, and now plus 32. And Navcar Corp minus 15, plus 14, plus 20, plus 31. It just tells you that there is a upward trend in certain companies that we are seeing, which is score up on a every quarter basis. So let's look at the bottom line so far. The quarter three results are giving us, which is the December results that we are seeing in progress right now. 44% have declared positive. Average CFT score has gone up from 3.24 to 5.11 this quarter so far. 72% of the mid caps are showing positive trends. That is the best performing market cap right now. Banking and NBFC both are looking strong. 22 positive trends across NBFCs, 9 in NBFCs, 6 in PSU banks, capital markets 4, private banks 3, PSU banks and fertilizers are all 100% positive. So NBFC and banking are still shining a lot in this particular quarter as they were in the last quarter as well. They're continuing their performance. Buy rated stocks that we 5 discussed out here, the top rank so far after 164 companies results have been declared. HCL Technologies at 85, NetWeb at 82, Union Bank at 78. And if you look at 4 consistent quarter performances, fertilizers and PSU banks are leading in the consistency side of business. Now, obviously, quarter 3 2025 is a turning point right now because 44% are in the positive. Data can change quarter on week basis. I assure you that next Monday we'll be covering how we may have by the time 500 companies declaring results. So our scorings will change and we'll keep tracking on these so that you don't have to go and find or mine these stocks on the site. All right. Before I get into Q&A, this particular offer of 14,999 for 1 year plus 1 year free is now closed. Thank you so much for all your support. A lot of you loved this particular offer. For the time being, this offer is open. We are going to close this soon. This is only applicable for webinar attendees who are you right now. 19,999 for 1 year plus 2 years free. It's a 3-year free offer, but the thing that we've never done before is that this is a India plus US offer. You get India plus US. If you are already a 2-year subscriber and you buy this particular pack, your India pack from 2 year will become 5 years. 3 years will get added. Plus you will get 3 extra years of the US pack. As I said, one of my favorite packs out here, and this is now up for closure. This is only applicable for paid users on this particular webinar. With that note, let's get on to Q&A.
Okay, I'll start off with this first question by Tanishq. Hi Mohit, should we take any major learnings or picture abhi baki hai?
Picture बहुत बाकी है, Tanishq. अभी we are just at the starting phase. I think if we have 1,000 odd stock results, which will happen in a week or 2 weeks, we will have a very, very clear picture. So, but it is giving a very, very good trend. You know, the thing about data is not about presentation of the data, it's about understanding what you can take from the data. So what I take is 2-3 things. Very clearly, I personally feel that mid and small caps, and you remember I was having this whole discussion and we are supposed to do this webinar with Sunil, where my view was more in favor of mid and small, his view was more in favor of large. But my view was very similar to, I think, the corporate earnings of the agility of mid and small cap companies. They will come out as better. So right now it is saying I'm not planting my tree as yet. I will wait for more results to come out. So that's one. B is market is still not responding. So market is in the conservative zone and we are good. We know that. We at least are aware of that, right? So C is that with these kind of results coming up, there is a chance that the valuations of mid cap and smaller cap will come further attractive into the zone where a lot of investors will start looking at. These are recipes of a momentum phase that can come out, right? Currently, mid and small caps are not cheap. The valuations are very high. But if this trend continues for maybe another 3, 4, 5 months, then you can see that the valuation will come in a very hit zone. So these are interesting points, but PSU banks continuing the rally, but the jumps are not that high now. So you're there. NBFC, fertilizers, these are companies that were doing good. They're repeating their particular performance. IT, you can see that there is a lot of arbitrage opportunity that they've got because of the dollar and the cost efficiency because of the AI coming in, and so there is all of these things that are coming out in the results. But as you rightly said, picture abhi baki hai. We should just wait and watch for another week or 2 weeks. As I said, I'll be there again on Monday, and we will dissect this further.
Okay, moving to this next question by Amitabh. Hi Mohit sir, in spite of all this good results, the overall markets are falling almost on a daily basis. My query is, when do you think Nifty may move up decisively?
I personally feel that in this quarter, there is a decisive movement that will come. And Amitabhji, I have certain mathematical calculations that I have done. I'm not a predictor of the market. My knowledge is not that deep into how these charts move and how technically things move. But my personal view is you would see in this financial year itself.
Okay. A question by Nimesh. He's asked that, don't you think equity time is over and next 2 years belong only to commodity? And we are also going to a commodity super cycle. Most of the equity investors would be losing opportunity day by day, if not in commodity investments.
I would tend to fully disagree with you, sir. जो एसेट क्लास ने आपको एक साल में 60% या 150% रिटर्न दे दिया है, दैट इज नॉट समथिंग दैट यू ऑलवेज दैट्स अ वे टू सी दैट इस साल भी उतना ही रिटर्न आएगा. माय व्यू ऑन बोथ गोल्ड एंड सिल्वर इज नेगेटिव फॉर द ईयर एक्चुअली. So, and we can only fight about this whole thing because of where I stand and you stand. But I'll tell you one thing, that I am not blatantly a India equities guy. It is not that I am born and I sing only one song. I understand asset classes, and I personally believe that this year that asset mix is going to change. You may still have, gold up by 10% or something, 10-11%, but that is not something that you will see as a repeat story. And I personally believe that silver is overpriced. I don't think so. The way you guys are expecting copper to move, it will move. This is a risk-off strategy that is playing out. This is a lot of, dollar hedging strategy that is playing out. So all of those things combined together, I personally believe that this may not be the year, and I can be wrong on this one in my analysis, but I don't think so. This is a year of commodities.
Okay, this next question by DP Mohanty. Should we book profits before results are announced, where, let's say, the stock belongs to a non-performing sector?
Mohanty sir, I don't think so. Because, and it will be very interesting when we launch our sector trends to you, because I assured you that we will be launching our sector scores. So we can look at that point in time, that if the sector is is not doing good and the stocks and you try and sell that stock beforehand. But right now I would say that may not be. It's a very mixed kind of a slate. You never have a sector where all the stocks will do badly. You have, if you're still holding very, very strong, fundamentally strong companies, you will still have a chance of these stocks doing very well. But having said that, sector score or sector fundamental trend plays a lot. And I personally believe that I will be able to scientifically answer this to you in this quarter itself, once I would have built up the whole sector scores and tested it out, and then we can plan out together what kind of a strategy we need to use if the sector is bearish and you are holding a stock within the sector which is a strong buy, for example. Or if the sector is bullish and you're holding a whole stock, I'm not saying sell or strong sell, but a whole stock, can that get re-rated to a buy or a strong buy? So give me some time. It's a very intelligent question you asked me, but just give me a little time on this.
Okay, many of the investors are actually asking this particular question. I'll just pick this one by Abhijit Datta. Wari Renewables at 32 CFT is sell, but NetWeb at 32 is a strong buy. What could be the reason of this?
It's a good question. Let's find out together. Let me just go there and find this out with you. Okay, guys, give me the screen. Sorry. So quality is average. Valuation is expensive. Financial trend is consistently positive. Technically, it's in a bearish zone, it's in a correction zone. If you look at all parameters are bearish. Let's look at very low institutional holdings. I think it's predominantly because of the quality, but I still feel that it should not have corrected so much. Okay, let's see when the score was last quarter. It has moved from hold to sell on 5th of Jan. Okay, it's a question. I'm getting a little doubtful on this particular company. Jason, just note it down. Let me analyze this on the back and try and see if there's any error on this. Good point out there. Let me just go and see. NetWeb I saw in the morning only, but let's again see it. Okay. Quality is excellent, so that is all three dots are within management risk, growth and capital structure. All three are great. So quality is excellent. Valuation is very expensive. In fact, it is more expensive than Wari. It's in a bullish zone and financial trend is outstanding. So I think the main parameter that is driving this is quality. But let me just check why average quality is giving a sell and not at least a hold. Or it's moved from a hold to, let's go again. I just want to see the chart. CFT is improved. The score should have improved. Let me just go and check this and get back on this one. Jason, just after this, let me just sit with the guys.
Sure. Now I'll pick this next question. This is by Vishal. Another question around CFT is that once the company starts delivering very good results, let's take for example CFT score of 25 plus, how can we safeguard that it is not the top or best performance of the company in that particular quarter, as company can also start giving decreasing CFT from there on?
Yeah, I mean that Vishal can always happen. The only good thing that I do or what we do is that when you saw the chart that I was showing you. If you look at those kind of things can happen if there's a sudden deviation out there. It was a negative, flat, and then positive, huge positive. Then you have a reason to doubt. But if there is a stock which is consistently in 20-30 range, that's a safer bet to be in because you have the consistency factor out there. But you cannot project what the next quarter result ideally would be, primarily because that's a factor of a lot of other things. But that's where your quality dot comes into place, because a quality will never turn into a good or excellent, because that looks at 5-year track record, right? So combine the quality with the CFT and you'll have a better answer. That's one. Then obviously you have the valuation. Whether the price is coming in along with the earnings or it's only the price that is going out, right? So essentially, most of the high valued companies are typically little better. The reason is the market is expecting better earnings. So the price moves first and then the earning follows. So for me, that's the reason valuation of an expensive, it doesn't bother me that much, because it is typically telling me that the price has moved first and the earnings are about to come, or the investors are expecting better earnings out there. But if it is an attractive company, which is the price has not come that much and the earnings are still there, sometimes that can also raise a red flag, because then you know that maybe the street itself is not expecting better earnings on this particular stock. So that's the reason that valuation can be seen in both ways, inexpensive or during the stage of it being attractive. Again, to cut this further down, the large cap companies, typically you see it in a different way in the small and mid cap, because large cap companies are typically overbought by institutions and all this stuff. So they don't play with so much of volatility within their results. But there is a very unique way of looking at how you can look at valuation and the quality. It will tell you that whether the next earnings are going to be better or not that good. But otherwise, there's no way to project how the next quarter would be, unless obviously you're basing something on the management commentary, and which typically I don't trust that much, because all management commentaries are one-sided. But unless the result is out, you would be dependent on the data coming to you.
Okay, this question by Dinesh. Hi Mohit, some companies you showed are sell but improving CFT. Can I add them in the watch list and monitor?
No. Yeah, you can add them in the watch list, Dinesh. You can add them in the watch list, not an issue. But let's wait we are just 164 companies down. This data is going to change and this data is going to look very, very interesting. I want you to make sure you're with me every Monday so that you can see how this data evolves. Because अपन एक दो बार इसको कर लेंगे, then you'll be able to understand how this whole story evolves over a period of time. Add them into watch list. Don't take any calls right now. Add them into your watch list. Just observe it, and you will start understanding this as good as how I understand it if you keep just a watch on it.
Okay, we've got this request from a couple of investors. This one by Advaid is that I'm a subscriber of US only since I invest there. Can you please give us an offer of the 5 years?
Sir, we had closed that particular offer. If you want, I can switch it on for maybe 10-15 minutes. If you missed this thing, you're talking about the only US offer where you're getting 4 years free, right? Is that what the investor wants? Jason?
Yeah.
All right. So you're paying 19,999 for 1 year, only US. This doesn't have India, and you're getting 4 years free. So 19,999 becomes an offer for 5 years. You pay for 1 year and you're getting 4 years free. Sir, we will just switch this offer out after the webinar. Maybe I'll give you half an hour and we'll switch this out. So if you want to avail of this, please do so now.
Okay, this question by Rahul Kumar. You would agree that many times results are already into the price and companies fall even after good results. Then why are we digging data for the already run up stocks and entry at higher levels, which could lead to losses and stop loss trigger?
Oh no, Rahul Kumar ji, see if the market was so intelligent that all the prices are in the results, then there is no need of people like us, and it is not such a perfect science. There is a sentiment on a stock or on a company that it will come out with good results. That is always there, right? And that is there on only 150, 200 companies. It is not there on all the companies. Please don't think that there is anybody. We are the only people who are researching 4,000 stocks. The top research houses in this country, they analyze only 150 stocks. So it is to assume that 4,000 companies का price सब earnings उसका सब price में discount हो जाता है, ऐसा नहीं होता है sir. That it doesn't happen. There is maybe हाँ इसका result अच्छा होएगा, कितना अच्छा होएगा, that all is relatively new. And all of these things typically please understand when the market gives a little bump, then these fundamentally strong stocks have a higher bump, right? And our job is to make sure that over a 3-5 year period, if we are in the strong buy and buy basket, let's say strong buy and buy basket, I think there is relatively good chance that we should be able to beat the index very smartly. So that is what it does. But this is not the case that all the results people know about everything and it is all discounted in the price.
Okay, Mohit, that's it with the Q&A session for today.
All right. Thank you so much. I will see you next Monday to make sure that we take benefit of this and make sure that you would have subscribed to this offer, especially that 19,000 offers that we have. The other offer is already closed. One is 19,000 for 1 year and 2 years free of India and US. And the other one, which is going to close down in 15-20 minutes after this particular webinar, is 19,000 for 1 year plus 4 years, but that is only a US plan. Thank you so much.